Hey everybody, so today I wanted to talk about Nike earnings, but I wanted to start us off by just looking at their chart today. So if we're just looking at Nike, they fell 2.13% and they fell another 2.71% in the after hours. Now the one thing I do want to pay attention to right here is that we have these two gaps right here, as you can see. So this first gap actually takes us down to 108 to 109.53. So in the after hours, we are in this gap area. And we basically filled that gap right there in the after hours. Now, we also have this gap up here, which starts right around like 117 and it goes all the way up to 118.60. Now, another interesting thing to note right here is this 50-day moving average is right at 117.01. So it's at the bottom of this gap fill right there. And sometimes during earnings, you have this tug of war where people say, hey, you know what? We got some bullish news. And then other people are saying, no, 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 this is not bullish. You got to perceive this as being bearish. And that happens during earnings. So you see this tug of war, and then eventually you see this direction play out. So it wouldn't surprise me at all if Nike just opens around these levels. We fill the gap and then we rally back up here and then we fill that gap and then who knows what happens after that. Probably just trade sideways or whatever. So if that does happen, I'm not saying that's going to happen, but if it does happen, I wouldn't be surprised because you do see these things all the time. Now, just zooming out a little bit, we can see that we have this resistance trend line right here. This has been acting as resistance for quite a bit, and you can see it kind of lines up with this 50-day moving average. So it wouldn't surprise me if we just rally up here and then boom, another leg lower. So let's just go out to the weekly time frame and just see what happened here. So we actually hit this prior pandemic high, as you guys can see, and we fell below this 200 weekly moving average. Right now, we're slightly below it. The 200 weekly is at 111.68. So that is something to pay attention to. Now, that's it for the technicals. We're going to go straight into the financials here. So this isn't their full 10Q. It's just like a snippet. And we will get their 10Q filing later, which will have a lot more information in it. But these are basically just important metrics that they gave us. So here we got diluted earnings per share was zero point 0.9 for the fourth quarter. We have a new 4-year 18 billion program to repurchase shares. Now, I don't really think that this is that big of a deal because we did have a 15 billion share repurchase program that got approved in 2018. So, now it's 18 billion. I wouldn't say that's that big of a deal. It's not like it doubled or anything. So, scrolling down, they talk about non-reoccurring items that impact their fourth quarter. So they say approximately 150 million associated with the deconstruction of their Russian operations and transition of their business in Argentina, Chile, and Uruguay to strategic distribution model. So we'll look into this a little bit more when we get to it in the income statement. Now here we could see selling and admin expenses increased 8% to 4 billion. Now they say demand creation expense was 1.1 billion, which is up 6%, primarily due to increased sports marketing expenses and continued investments in digital marketing. They talk about operating overhead expense increased 8% to 3 billion, and that's due to higher strategic technology investments and an increase in Nike direct variable costs and wage related expenses. So no surprise there. Now they talk about their balance sheet. Now I thought this was probably the most important thing in this whole 10Q. So they said inventories for Nike were 8.4 billion, up 23% compared to the prior year period. And they say that this is driven by elevated in-transit inventories due to extended lead times from ongoing supply chain disruptions, partially offset by strong consumer demand. So here, let's just talk about this a little bit. 23%, that's quite a bit. So they have 23% more inventory than the prior period. Now, we don't really know how this inventory is broken down. So that's kind of the worrisome part here. We don't know, is it mostly shoes? Is it mostly apparel? So that we don't know. But I would assume that, their revenues were pretty consistent. So I would assume that their inventories wouldn't be like heavily apparel or heavily shoes. So just given off their revenues, which we will see. They break it down. They break down the revenue for us later on. So here they say, in the fourth quarter, the company returned approximately 1.5 billion to shareholders, and this is through 481 million in dividends and 1.1 billion in share repurchases, and this reflected 8.5 million shares retired. Now, for the full 2022 year, we got returns approximately 5.8 billion to shareholders. That's 1.8 billion in dividends and 4 billion in share repurchases. So a total of 27.3 million shares were retired. Now here we could see their consolidated statement of income. We see revenues basically, they didn't change a whole lot. We saw a 5% change. So, nothing big. So keep in mind, these numbers are in millions. Now, when we're looking at this interest expense or income, we see right here, other income expense, we see 54, and we see 181 right here for the full year. So 54 is actually an expense, because keep in mind that we're in expenses right now. So a positive number is an expense. But right here, the total for 2022, it's negative 181. So negative 181 is actually positive. So this is income, because keep in mind, we're in the expense section. So a positive number means it's an expense. A negative number means that it's income. So this is actually good. This negative number right here, that's good. And if we go into their 10Q from the last quarter, we can see that why it's this amount right here. So I'm going to quickly pull that up. So we could see in their other income from their prior quarter, they said for the third quarter of fiscal 2022, other income expense net increase from 22 million of other income to 94 million in the current year, primarily due to a favorable change in foreign currency conversion gain and losses, including hedges. So yeah, that most of that came from this right here. Favorable change in foreign currency conversion gain and losses. So as you guys can see, from this 3-month ended period, basically the quarter, it was positive 94 million. So that's just a little bit of insight on that. But you can see right here, we got an expense of 54 million. So that's because of what they mentioned before, deconstruction of the Russia and extending out into Paraguay or Uruguay and those other countries. So now finally, they give us this diluted number, diluted earnings per share, and we can see right here it's 375 versus last year of 356. So now we can actually calculate the PE ratio given this 375 number. So we could do that real quick. So let me just pull up the calculator. So we're going to do 110.50, divide that by 375. Oh boy, PE is sitting at 29, it's about 29.50. I wouldn't say that's all that great because if we go into Nike PE ratio and we're just looking at the historic PE, it generally likes to sit around 20 to 25-ish. In recent times, it's been sitting around 30, and it's actually gone pretty overextended. It's gotten pretty crazy. So I would say like 20 to 25 is probably more, there's more history to back this level up. So let's just recalculate what 20 PE and what 25 PE will look like. So we'll do 375. We'll multiply that by 20. So that's 75 at 20 PE. And 375, we'll multiply that by 25. That's 93.75 at 25 PE. So yeah, if we're going down to 70 PE, what does that look like? Well, yeah, that'll be right around these levels right here. Boom, all the way down there. So let's just go right back into those financial statements. So yeah, now here we're going into the balance sheet. So we can see inventories right here. And this is where we see that huge discrepancy, 23%. Now they give us a breakdown of revenues. So they give us the divisional revenues. So here we could see footwear, apparel, equipment. And we can see, it's increased for every single segment. But notice that their footwear is the biggest in sales. So that's why I was talking about their inventory. We don't really have how their inventory is broken down. If their inventory was mostly broken down to footwear, then yeah, that's not really bad that they have extra inventory because look at what they sell the most of. They sell the most of footwear. And if we're just looking at apparel, well, if they have more apparel, then, not as good. So that's what I'm talking about, how inventory, how that could be a little bit worrisome, how it's broken down, which unfortunately they don't give us. So that's basically my breakdown on Nike financials, and I hope you guys enjoyed this video. Definitely leave a like or a comment. Tell me what you think about Nike, and have a great one, you guys.